Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about the top 5 stocks that I recently just bought, given the whole market sell-off we've seen. I'm never fearful of sell-off. I always look at it as an opportunity to find stocks that I believe in, that I understand, and just carry potential at a cheaper discounted price. Imagine you wanted to buy a house and that house is trading or it's for sale for $100, and then one day it's now 80,000, 50,000. You're going to be trying to figure out a way to buy that house. That's the best expression I always have when it comes with investing during recessions. It's all of these stocks carry potential. It's just finding the best ones. And more importantly, there's always opportunities. So, I hope you guys all enjoyed this. If you have any questions, feel free to ask down below. And if you guys want to learn more about investing and trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So click that link down below. Use code TRADER to get 51% off. So check it out. And guys, let's jump into this here. So, all right, what is the first stock here that we bought? It's actually the one and only NVIDIA. Our average cost is going to be near and around the 109 mark. It's already up to 121. Now, why did we buy this stock? Well, this stock here was more of a swing trade. It's kind of what we focus here on the channel. But if you are new and you're like, I don't even know what that is, hold on, don't leave just yet. You guys can see this zone here of red. This is what we call a support line. So it's, has great tendencies of getting buying pressure in this zone because of this buying pressure. Recently sold off down to that level. We also use the RSI, which is the relative strength index, pretty much tracks momentum. The last time it was trading for a 35, which is the RSI price for pretty undervalued, was back in this range where we had that good move. So sold off down to an undervalued spot. The next thing here is going to be looking at a lower time frame. You guys can see just this general downward trend, and this is what we call a breakout. Getting in on that breakout above it, near and around 109, and the stock has rallied its way up, keeping our stop loss for the trade just below that trend line. So it's easy, it's simple, but more importantly, another reason I love it is the fundamentals, right? If we look at these, they're absolutely fantastic. The revenue is up 114%, right? Operating income, gross profits up 120%. So all of these carry potential, and NVIDIA is definitely paving the way for AI technology, all that stuff. So what is stock number 2? Stock number 2 is actually going to be Google. Now, Google stock here does have a lot of volatility, but more importantly here, why we got in is you guys can see just the pure sell-off. And I understand there's some people saying the company could get split up. I'm well aware of that, but the stock has sold off 20% in less than a month with zero signs of turnaround. But more importantly, looking at this here, the PE ratio is 20, which is super undervalued for a growth stock. And the average analyst price target is $117 a share, which is like a 30% return, with the average analyst giving a buy rating, which is awesome. But more importantly here, Google has a ton of money in cash. They have like $175 million in cash. So if they ever go through a hard time, they can continue to invest, pay their employees, grow the business, which is always good. So I also think, looking at Google here, we can see the fundamentals doing very, very well, right? The financial statement up 13%, the cost of revenue, gross profits growing. The only slowdown we've seen is on expenses, marketing expenses, stuff like that, which would overall increase that operating profit, which we've seen. So that's pretty good there too. So, all right. What is the third stock that we recently just bought? The third one here is going to be Amazon. Now, Amazon here has this beautiful trend line where we've seen great amount of support here on this. So buying pressure, buying pressure, buying pressure. Recently sold off down to that zone. Now with Amazon, we actually did dollar cost average this one on this sell-off here. We started this process here breaking down through that 90-day moving average line, and it's continued to go down all the way down to lows at about 190, which is good. Our average cost is going to be near and around that 209 area. So that's really good. And honestly, we have that good upward trend. The RSI is good, but let's look at some of the analysts here. And the average analyst price target is $272. So from the current price right now here, this would give a return of near and around 40%. And look at the average analyst. 100% of the analysts are giving Amazon a buy. So yes, we are loading up on Amazon. I think the potential is there. We could see a little more volatility, especially if we go through like a recession or a crash. I'm well aware of that, but you can't be fearful of sell-off. We can dollar cost average this if it continues to sell off. So that's why we recently picked up that one here. All right. What is the next one? The next one here is going to be the one and only Visa. Visa is a very, very phenomenal company. Picked it up on that 90-day moving average line because we can see the heavy support here. Super undervalued on that RSI. But more importantly, why I love this here is if we look at some of the fundamentals on Visa are really, really good. The net profit margin. So after they pay everything, taxes, employees, all overhead, their profit margin is over 50%, which is incredible. So what this means is they have a lot of leftover money that they can use to save, invest, or if they go through a tough time, they can continue to grow the business, which is good. Another little thing here that a lot of people think is with Visa, if we go through recessions, people are more likely to take on debt and credit cards, which would overall correlate to an increase in Visa using. Now, looking at this here, the average analyst price target is about $389 from the current price of $331. That's really good here. So let's go ahead and draw that out. That would be a return of near and around 17%, which is that's exactly what we want. All right. The last one here is going to be the GOAT, the best one for beginners, the best one for all of you guys watching this video. And this is VOO, the Vanguard S&P 500. This thing is astonishing. It's super undervalued. We saw this huge dip down. All these fantastic holdings here. A lot of them are ones that we talked about, like Amazon, Google, all these, which is really good. And historically, why I love VOO is it's the Vanguard S&P. So it tracks the top 500 companies, average return rate of 10%. And historically, if you guys invest during recessions or dips, this can really double your return. There's a lot of data on this actually. If you just invest consistently and you don't pay attention to recessions or crashes or dip down, you have that average return rate of 10%. Now, if you invest more during recessions, if you double what you put in, you jump that average return rate from 10% to 22%, which is astonishing. So don't be fearful of sell-off. Use it as an opportunity to find stocks you believe in. And more importantly, guys, do your research. Do your own research. These are great companies that I believe in. If you don't believe in them, don't invest in them. But overall, guys, hope you guys enjoyed it. Smash that like button, and we'll see you guys in the next one. Take care.